Hello everyone and welcome to the Financial Investor channel. My name is Brent and today we're going to be doing a live stocks ex dividends next week. So every week on Wednesday, this week we're doing it on Tuesday. I'm going to be doing a video going over how to find stocks with ex dividends next week. We're going to be screening a number of stocks between 20 to 60 normally. We look at their price earnings ratio, their revenue, their net income, and their free cash flow. And then any stocks that have any sort of moving over the last 10 years into a downtrend, we remove those from the list. Also, we cut off any stocks that have a dividend yield under 1.5%. So I do have my screen being shared here. I also have my cam here on the bottom. And if anybody wants during the live, you guys can just go ahead and type in questions. I'll see it there on the display. And yeah, if you guys have any questions, drop it in there. If you're brand new to the channel, remember to like, comment, subscribe for new content, and let's go ahead and get into it. So here I'm going to be starting off on dividend.com, and all we're going to be doing here is clicking on X dividend dates. So X dividend coming up next week, I just go ahead and deselect everything. I'm going to be checking between the 9th of June and the 13th of June and searching for stocks with X dividends next week. There's a number of stocks here. I then sort it by the DRI's rating system. Now there's a couple 5.0 rated stocks here. Now if you flip over, if you open up best dividend stocks and then scroll all the way to the bottom, it shows how the DRI's rating system is. It basically just measures the strength of the stock, whether it'll be trading towards a 52-week high. Dividend yields that aren't lower than 1% but aren't higher than 10%, those would be risky. Dividend reliability, how payout ratio wise, are they 50% payout or are they 90% payout? So it measures the riskiness of the payout. The dividend uptrend, are they more likely to increase their earnings in the future, and that dividend is pretty much safe. They'll be able to increase it year over year. And then earnings growth is just over the next 4 quarters. Are they expected to be more profitable? And then it gives it a measurement between 3.6 to 4.5 for recommended, and then anything higher than 4.6 to 5 is highly recommended. So normally I grab anything with a 3.6 rating or higher, depending on how many stocks are available. So here I will just grab anything from a 5.0 all the way down to a 3.6. So I'm going to go ahead and just grab these right here, and I'm going to start at the top here. So starting at the top, I'm going to go ahead and select these and scroll down all the way to 3.6 here and copy these into my spreadsheet. So here for the month, for next week, we have 46 stocks that are going ex dividend next week that have a rating of 5.0 through 3.6. So we can see that some of these are qualified, meaning that they will be taxed at a lower tax bracket depending on how long you hold them. And if you fall into, I believe, the now 12-15% tax bracket, then your dividends aren't taxed, but you'll have to just kind of look that information up. But if you're trading within a Roth IRA, that tax sheltered account, then you could essentially buy anything, whether it's qualified, non-qualified, or unknown inside your Roth IRA, and you wouldn't have to worry about paying taxes on that. So here, we're just going to be entering these ticker symbols into Y charts, and I'm going to go ahead and copy each of these individually. Now, because this is a live session, this process I would normally try and cut out during my videos. So this may end up taking a little bit longer. I try to make a macro that would do all of this for me, but it doesn't read this page. So I haven't found a better way to really do this much faster. There's 2 Cracker Barrels there, and Camden, and here. So all I do here is go down the list, grab these ticker symbols, and put them into my Y charts for my screening process. Now, by doing these stocks with X dividends every single week, I may, if you listen to the media, you're only going to get exposed to maybe 5 to 10 stock names per week if you're not really out there looking for new stocks to look for. Whereas if I do this stocks with X dividends next week, I'm getting exposure to right now 46 different stocks that are going ex dividends next week, and then anything that is below that 3.6 rating, I didn't really care to screen it anyways because you know, the DRI's rating system is a pretty good rating system to kind of go off of. So I kind of go down here, and there's a bunch of stocks here I wouldn't normally have researched on my own. There's a couple of names here that I recognize, but majority of them, 95% of these are non-recognizable. I don't really know what they do, but normally if I'm screening for a stock, it's not bad to get something that you're not familiar with, but normally you want to stick with your very first couple stocks, your strong stocks, with products or services that you use yourself. That's how you kind of get the idea to invest in a specific stock. So here I saw ABBV, which is a pretty common pharmaceutical company I used to be invested in a while ago. And then I saw General Mills there, that's cereal, and all sorts of other products. So we are just about done sticking these in here. And there we are. So we have all of our stocks that we're going to be screening for, stocks with X dividends next week. So I'm going to go ahead and just expand this, and we can zoom in there just a little bit. So why do we first screen these stocks for a price earnings ratio less than 25? Well, right now the S&P 500 averages for its price earnings ratio around 24.7. I do have the S&P 500 PE ratio up right here. So the S&P 500 PE ratio is currently at a 24.7. And this fluctuates depending on the day. You can see today we had a down day. So 24.7, I usually round up to 25. So anything below 25 is considered good. And then for dividend yield, I like to cut out anything with a 1.5% dividend yield. So this is averages of 1.8. I like to just round down. That makes sure that you get stocks in there that are both growth stocks and just long-term dividend stocks. And here, I'm going to go ahead and make sure I have about 12 selected. So 2, 4, 6, 8, 10, 12. And then first thing we're going to be screening for is their price earnings ratio. And this doesn't matter whether it's 4 years or 1 year. So here all we're going to do is look for anything with a 25 here and knock it off my list. So this is a very light blue, which is here light blue on top. So I just deselect the top one. 26 dark blue, Marsh is in the middle. Deselect Marsh. 30 got that kind of brown greenish color there. That banner is at the bottom of the list. So I just go ahead and deselect it. And that leaves me with the stocks there that screen through the first process of stocks that with a PE ratio less than 25. So to continue doing the same thing, Abbott Laboratories. AbbVie was a spinoff from Abbott there. So I'm going to go ahead and continue through this, screening these stocks down. And, we're going to be screening 46 stocks fairly quickly. And I'm not really paying attention to their names. All I'm doing is looking at their financial metrics. And based off what I normally screen my stocks for, that's just what I knock them down. I knock them down based off the averages of the S&P 500. I'm not sure where my last one there was, but reselecting my next 12, knocking off New York Times and Hilo and a few others here. Pink and Raven. Yeah, I don't like to pick a lot of favorites during this process. Campbell, for example, that's right on 25. And Campbell, I'm going to go ahead and leave that one. It's right on 25. And let's see, we have an orange or red. 26 is purple, Bell Fused. Remove that one. 26, another purple, methode. And that's it. So we just screened all of these stocks here for a price earnings ratio less than 25. Next, I like to look for a dividend yield, which is over 1.5. So again, I just grab the next 12. And then anything with a dividend yield less than 1.5, I will go ahead and remove. So Dollar General, I've seen some investors out there that have bought Dollar General just because we're in a growing economy right now and people are having a lot of, the job ratio is very low as far as how many jobs are not I can't think of the number or the term, but basically there's more jobs out there than there are. Unemployment's at a record low. Unemployment right now, That is a super low level, and I just read an article about how employees are ghosting right now, meaning that they're not liking their current job, so they just end up not even reporting that they're leaving, and they get another job elsewhere. So Moscow dividend, Moscow, and 1.19, connect 1, 1.5. Okay, so there's everything there with a 1.5 and higher. And move on to my last three here. So all we're doing is knocking out Johnson outdoors. So here we have screened 46 stocks down to about 25 now. These all have price earnings ratios less than 25 and dividend yields over 1.5. Next, I like to grab or check them for their revenue, net income, and free cash flow over the last 10 years in a percentage base. So over the last 10 years, percentage-wise, have they been increasing year over year? So this one, for example, all positive numbers. Their revenue was up 7.6% year over year. Their free cash flow is up 18%, and their net income is up 7.7%. Whereas some of these other stocks here, as we kind of scroll down this list, they may have some negative numbers. So those are all good there. Surprisingly, a lot of these stocks here are all positive. If we don't end up knocking a bunch of these out, I'm going to go look at the last 5 years and see. We can do that here. Trinity, there's some negative numbers there. Negative numbers for Campbell Soup. That one had some very positive numbers there. Avi, Ethan, General Mills, positive there. Positive, and Trenzio, negative revenue. So we can go back and just look at 5 years and kind of do the same thing. So over the last, free cash flow, I shouldn't have probably knocked it down for free cash flow. Let's see, what was that first one? TBK. TBK, so it may have been Brandy Corp or Glacier. Adding it back in, I think it was this one. No, it wasn't Brandy. So it may have been Glacier. Yeah, it was Glacier. Okay. So I'm not going to knock it down for free cash flow over the last 5 years. Free cash flow being negative could just mean that they're doing some sort of acquisitions. So I'm not going to knock a company out for just having less free cash flow over the last 5 years. That's not a really good estimate there. Here, for example, MSC Industrial has been going down in net income for the last 5 years. Very slowly, 0.02% decline year over year there. Darden Restaurants. But the other ones of these are actually pretty good. General Mills, we got slightly decline in revenue there. And Glacier Bancorp, yeah, we already checked that one. Okay, so here we have 2, 4, 6, 8, 10, 12, 13 stocks with price to earnings ratio under 25, dividend yields over 1.5, rising revenue, free cash flow, and net income over the last 10 years. But we do have a few in here over the last 5 years where free cash flow has been kind of gone up and down. And we'll kind of go on from here. So some stuff I like to take a look at now. Over the last year, are some of these stocks trading with a yield? Let's go back and knock this to our original format. So here we want a yield over price to see where there could be some good entries at. Yeah, you broke it. Congratulations there, buddy. It's okay. Hey, I'm recording right now. Can you wait just a second? We have price at $24 for American Eagle, dividend yield at 2.14. Sadie Holdings, price over yield. Hormel Foods, price over yield. Dr. Pepper Snapple has shot up recently, whereas most stocks here fell in January, February timeframe. Oh, Dr. Pepper, I believe that one got picked up though. Maybe it got, okay, maybe it was acquired by another company. I forgot what happened there with that one. Here we have Cracker Barrel. The yield is above the price, meaning this could be a good buying opportunity. You can see here that the bottoming out point for this one has been around this $157 point, but it just hasn't maybe broke out. Maybe there was an earnings here that drove it off that bottoming out point, but it just kind of came back into there. So this one here, this would be a good little research one. Is Cracker Barrel worth an investment? And that would just want to research this a little bit more, as that dividend yield is at a 3.0. We have Camden National, price over yield. Darden Restaurants has shot up recently in what looks like June, from roughly, $90 point, now up at $108. Yeah, Dr. Pepper did get picked up by, who was it picked up by? I forgot who it was picked up by, but yeah, I saw that stock shot up quick when it got picked up. And then here we have First of Long Island, yield over price. So this one, financial, looks like maybe a financial institution. I know they have came down recently. Financials across the board, Goldman Sachs, JP Morgan, Wells Fargo, a lot of the financial institutions, yeah, I don't remember either, have been falling recently. So kind of interesting there. I think I have one or two financials in that financial sector. Here we have Bank of OZRK. So you can see this one, the price has broke below its support line here. It had fell to its support and kind of was around there for quite a while at that $46 point, and has actually broke below. Dividend yield now above. So if we bring in our 200-day moving average, it's supposed to be around $48 for a 200-day moving average, but currently trading below. AbbVie is always a pretty good pharmaceutical company. You can see this one has taken a hit recently. The yield is currently above the buying price, and this doesn't, it happens for some time here back in 2017, but for quite a while after, let's see, what's after October, November timeframe, the price had came up. Correct. Oh, okay. Interesting. Bye. The price for AbbVie had came up quite a bit in comparison to its yield. Its yield had actually dropped below 2.4, 2.3 range, whereas now if you were to buy AbbVie, you're getting it at a 3.15, and the parent company that it split off of, Abbott, had actually been paying out dividends for more than 30 years. So AbbVie is looking like a very profitable company and will continue to pay out those dividends year over year. What do dividend yield over price? So so I like to look for a dividend yield over price, just meaning that for the year, it's this is just looking at the 1 year point, and over the last year, is the price currently trading above or below the average for the year for the last 52 weeks. So if I'm looking at a stock to see whether it's a good buying opportunity, I look at the year for it and see, has it during that time, is it currently trading above or below that medium point for the year where it would be kind of balanced. So here, AbbVie is currently below that dividend yield for the year, meaning that there are some buying opportunities. This could be a good buying opportunity. You can see here back in July of 2017, that dividend yield was, way over 3.2%. I bought AbbVie back in July of 2017, rode it until January, and then sold it off when I start kind of transitioning there. But that's what I mean with a yield over price. I just like to look these yields over price areas where I see a stock with a yield over price. That could mean that it's kind of averaging out for right now for the time being. You can see that the price had came up on this stock, for example, for a greatly out of range of the yield, whereas this is more balanced and kind of normal. And I would say this is probably a better buying opportunity than buying into a stock where its price is greatly over the yield for the year. So next here we have Bank United. It had been trading right now currently price over yield, and then Glacier Bancorp price over yield by quite a bit here. You can see that as of October of 2017, it had shot up from that $31 point. It doesn't grow faster. It's just when you're buying it right now, if you were to buy that stock right now, you would buy at a yield on cost higher than you would normally get it for the year. So if the year average for AbbVie, let's see here, if we look at just the balance here right in the middle between the price and the yield, you would probably get a the average yield you would be able to buy ABBV at for the year is around 3%, whereas right now it's at a 3.15. So it's actually, if you're buying it right now, you're getting a better yield on cost than the average for the year. So something to look at there. And we can take a quick look here, price in comparison to its 200-day moving average. So Territorial Bank Corp is currently trading above its 200-day moving average. American Eagle Outfitters currently trading way above its 200-day moving average as of November of 2017. Has came up quite a bit and is trading where normally it would be trading at an $18.45, but currently at $24. And it has came down kind of recently. You can see these little dips here, but then it kind of recovers very quickly here. So City Holdings, price greatly outweighing that greatly over that 200-day moving average. Here, Hormel Foods. That's one we can't buy that one. That's not anywhere you can really purchase it anymore. It's combined now with Keurig. So here we have Cracker Barrel. The price right now is $157.57, whereas that 200 moving day average is at $160.58. So this one could be a good buying opportunity. We saw that dividend yield was above the average for the year, where average this stock would be more at a 2.85, 2.9% buy yield, whereas now you're getting it at a yield on cost of 3.05 and a price of $157.57. where it's currently below the 200-day moving average. And this one has been on its support level here at that $157, $158 mark for quite a while. So this one, if you were to do a little bit of research, it has good financials as far as revenue, net income, and it has free cash flow right now. So I would want to take a look at its balance sheet, who are its competitors, what products and services they have that are competitive in that field, and see whether they are a good investment for the next 2 to 5 years if you're looking into something along those lines. Here at Camden, we saw that the price is over the 200-day moving average and quite a bit above that average yield. Darden, this one could be due for a massive pullback back down into the $96, $90 range. This is a restaurant. There's not a whole lot of restaurants out there that I know that can, keep on these highs for that long. So anybody that's buying into this one, I could see those investors getting hurt here in the future. First of Long Island, we already saw that yield over price, and they're trading way below their 200-day moving average. So this one, I would again do a little bit of research as to why that prices came down from over $30, where it average it would trade around 28. Well, that's actually its old support level here. So it broke below its support level. And maybe during earnings, it had some really bad earnings. And that's why it got sold off so hard there. So interesting one there to kind of take a look at. Here, Bank of OZRK's price is below 200-day moving average. A lot of these financials are going to be in this position where financials have just been hammered recently. ABBV trading below its 200-day moving average. I saw another investor, he was covering ABBV. It was, forgot the channel name. He changed his channel name, Jake Jones or Jake, I forgot his channel name, but I know he just put out a video covering ABBV and whether it's a good pharmaceutical company. And I think he thought it was a good buy and opportunity. And it does look a good buy opportunity there as well. Bank United, currently trading above that 200-day moving average, and Glacier Bank Corp. So based off these stocks, I'm going to go ahead and open these up here on the right in another window, and we're going to go ahead and put these in order and CHCO. We're going to put them in order of how long they have been paying out dividends for and see when their ex-dividend date is and when you would get paid out DRI. Let's see here. FLIC. Boy, I cannot see FLIC there. Oh, there it is. and ABBV. Danske Bank looks good. Which one's, oh, this one? And see which one I got to ABBV. So big BKU and GBCI. Okay. So here I'm going to go ahead and put them in order of paying out dividends first, because I like to see stocks that have continued dividend growth for, you know, any number of years. I have stocks that have over 10 years, and I have stocks that have over just 5 years. So let's see here. It's not on your list. Oh, okay, it's not on my list. $11, $8, $6, $5, $7. No payout. 6. Whoops, I closed one out. 5, 1, 0, and 0. Okay, so in first place as far as having dividend growth for the longest, we have Hormel Foods. It's a meat products, and it's in the meat products industry. Has a current dividend yield. Let's go ahead and bring it up over here. Hormel Foods. And let's see here. Zoom out just a little bit here. And we can get rid of this 200, bring in a little bit more information here. Okay, so Hormel Foods in first place, 51 years of dividend growth increasing since 1967. Its payout ratio is very low at a 42.8, meaning that if it were to lose half of its earnings and its payout ratio was to go up to 80%, they could still have 20% left over to be able to reinvest earnings back into its own company. Its ex-dividend is July 13th, which is next Friday. So you would have to buy this one on Thursday or prior, then you would get paid out on August 15th. We can see that they pay out 18 cents. Yeah, 51 years is a long time. So this one pays out 18 cents and an eighth there every single share each quarter. They're currently priced at $36.83, which is a pretty good buying price. Price earnings ratio at a 21.17. Dividend yield at that 1.94, 2.04, depending on when you buy it. It's currently trading at a price to book value of 3.6, which is slightly higher than where value investors would consider a value, but it's still a good buying opportunity. You're also getting it at a very good buying price to sales price here. Price to sales is at a 2.1. So good looking stock there. Second, we have ABBV, 45 years of dividend growth. ABBV did come back, split off from Abbott, and I believe 2011 is when this stock had gone and kind of did a split. So this one, if we went back 10 years, we wouldn't see it. Okay, so 2013 is when this one had split off. And they just kind of continue to carry that dividend growth and kind of split. Again, payout ratio below that 50% ratio, which means that if they were to lose more than 50% of their earnings, they could just continue to pay it out. Their ex-dividend date is on July 12th, which is next Thursday, so you would have to buy it on Wednesday or prior. You would then get paid out on the 15th of August. This one pays out 96 cents for every share each quarter. It looks like they just increased their dividend sometime around January. They announced that they're going to be doing an increase. They increased their dividend here, and they're currently priced at $41.81. That's not right. What is that? Oh, price to book. So their price to book is very high at 41.8. Their dividend yield is at a 3.15, 4.10. Looks like they just increased their dividend. That's why this dividend yield isn't reflecting the current one. So this one right here, looks like they increased their dividend. They just announced, I'm not sure why it's showing this one much lower, but looks like they were paying out 71 cents a share. They increased it to 96 cents a share and have continued to carry that 96 cents a share. So that's a very, very nice increase there. Dividend yield or price to earnings ratio at a 23.58. Price is at $93.61. And current, what is this? Price to sales is at a 5.0. I know they have a number of drugs out there. One, I think it was for leukemia, that had just been approved. So that's a really interesting stock there to be invested in if you need a pharmaceutical. In third place, we have First of Long Island Corp. This has had dividend growth for the last 11 years, since 2007. So a lot of those financial institutions that cut their dividends or decrease or stop paying out dividends, this one, if we take a look here at the bottom, what did they do in 2011? Looks like they did a stock split. So they were paying out semi-annually. They did a stock split and decided to cut their dividend here because they split 2 for 1. So for every one that you had, they basically doubled it. And instead of paying you out 12 cents for every share, they paid you out 6 cents. So they gave you 2 for 1, and looks like they did decrease it slightly here for a few quarters, but then bumped it back up and have done a couple stock splits here recently where they just kind of continue to increase their dividends. So this one looks like it actually has been paying out dividends for longer than 11 years, but there was that little small period where they decreased it there for just a few quarters. Very good payout ratio at 34.3. Let's go ahead and bring in their data here. First of Long Island. So they pay out 15 cents each share each quarter. They currently have a price earnings ratio of 16.95. Dividend yield around 2.38, 2.34. They have a price to sales at a 5.8. Currently priced at $25.25. So we've said this one has came down hard recently, and they currently have a price to book value of 1.7. So it could be good buying opportunity. Could, depending on how the research goes a little bit further, looking at their balance sheet, looking at their moat, or not so much their moat, it's an institution there, lots of financial institutions out there. July 9th would be their ex-dividend date, which is next Monday. So you have to buy this one on Friday to be eligible for the ex-dividend date, and then you would get paid out the same month on the 19th of July. And next we have Cracker Barrel. 8 years of dividend growth. Payout ratio, I would consider still anything under 60 to be reasonable at 53.4. Let's go ahead and bring in their information here. They pay out $5. Oh, maybe they had a special dividend payout there. Okay, here. They had a special dividend payout of $3.74. Looks like they only pay out every quarter. Whoops, let's go ahead and expand that. So it looks like they do have some special payouts every now and then, which this one they paid out $3.75 on top of their normal $1.75 payout. So this one paid out a good hefty amount recently. They're currently priced at $157.78. Dividend yield around 3.05, 3.17. They have a price to earnings ratio of 15.8, price to sales or price to book of 5.9, and a price to sales of 1.28. So this one looks like a good, solid buying opportunity. Price earnings not too high. Price to book is a little bit high for other companies, but this one, it does look like it's actually at a good buying opportunity in comparison to its past. It's always right around this 5 or below mark, and its price to book or price to sales also stays right along this line. You can see all these little spikes here in that dividend are just special payouts that they've had over the last 5 years. So interesting company there. Next we have Bank of Ozarks. Let's go check out Bank of Ozarks. This one has a very low payout ratio, 21.7. Dividend growth for the last 7 years. Dividend yield around 1.66, 1.77. Ex-dividend is on July 12th. That is next Thursday. We'd have to purchase this one on Wednesday or prior, and then get paid out on the 20th of July. They pay out 19.5 cents per share that you own each quarter. You also get it at a price earnings ratio of 12.94. Dividend yield at that 1.6. $45.28 is currently buy price. Its price to sales is at a 5.9, and its price to book value is at a 1.6. Looks pretty good there. And then we have Citi Holdings, 6 years of dividend growth. Let's go ahead and bring in Citi Holdings here. So 6 years of dividend growth, payout ratio at 40% basically. If it were to double, if it were to lose half of its earnings, it would still have a payout ratio of around 80%. So very healthy there. Dividend yield is around a 2.39, 2.34, depending on whether you're buying it on a good day or on a dip. Its currently ex-dividend is July 12th. That is next Thursday. You'd have to buy it on Wednesday or prior to be eligible for that payout on the 31st of July. They pay out 46 cents per share each quarter. They currently have a price earnings ratio of 21.49. Currently priced at $76.92, 95.92. Their current, let's see here, price to sales is 6.3, dividend yield 2.39, 2.34, and that price to book value is at a 2.4. So pretty healthy one there as well. But that price is currently trading, higher than average for the year. Let's see here. What's next? Glacier Bancorp. There's always quite a few of these banking institutions. Take a look at this one. This one has greatly outshot its yield there. So dividend growth 6 years for this one since back in 2012. Payout ratio of 48.1. Its ex-dividend is on July 9th. That would be next Monday. You would have to buy this one on Friday or prior to be eligible for that payout date on the 19th of July. They pay out 29 cents per share. It looks like they have a special payout recently. Maybe a couple special payouts here. They just had one in September of 2017. And maybe there was another one here. Maybe not. Okay. Looks like they had a nice little payout there quarterly. So they pay out 26 cents per share. Currently priced at $39.24. Price earnings ratio is at a 24.99, still below that 25-point mark. Their dividend yield is at a 2.65, 2.19. See why this one shows a little bit off. So it looks like they recently increased their dividend from 23 cents. Oh, this one changes. So here we can see that they had a special of 30, then they had a 21, then they had a 23, then they had a 26. So I would say that 26 is their current one. You can see that they have these very steady increases here. And this could just be after regulations eased up on banks. So a lot of times they required banks to hold much more cash on hand, and they just kind of lowered the regulations on financial institutions. So they're like JP Morgan increased their dividend payout by 30%. I think we're going to see a lot more of that kind of going forward. And let's see here. That is that one. Next, we have Territorial Bancorp. Let's go ahead and bring that one in. Dividend growth for the last 5 years since 2013. Payout ratio 38.1. Ex-dividend is on July 10th. That is next Tuesday. You would have to buy this one on Monday or prior. You would then get paid out on the 25th. That would be a special payout. So this one has a special payout of 10 cents per share. Looks like, yeah, you're gonna see a lot of these financial institutions do these special payouts just because they have so much cash on hand and regulations eased up, so they're trying to maybe offset some of their money that's going to get taxed at the end of the year. So here they're currently priced at $31.33, dividend yield at that 2.55, 2.54, PE ratio at 19.3. This is a special payout. That's why that decrease there of 10 cents is less than normal back in the past. They have a price to sales at 4.6 and a price to book at 1.3. Next, we have Darden Restaurants. We had a question. I am making a stock screener. Do you know where I can get the best stock data? Yahoo or Morningstar often differs in basic data like PE. Yeah, I don't know a specific place. I normally look at Yahoo. I use Y charts quite a bit for pulling up just regular data from day to day. There's a good free, FinViz. There's a good online screener if you're interested in checking out. If you haven't checked this one out, it's called finviz.com, It has a little screener right here that you can screen all your stock information here and load up all that data there. So this is the good free one that I use myself. But I normally look at both Morningstar and Yahoo to kind of compare them and kind of get the best data there. So Darden Restaurants, we have, let's go ahead and pull that one up. 1 year dividend growth since 2017. Payout ratio still under 60%, but it is above 50 at 54.6. Dividend yield is at 2.76. 2.32 is what it shows over here. So they may have increased their dividend recently. So they went from 63 cents per share, just increased it to 75 cents per share. Very nice dividend increase there. They may have released some really good earnings, which is why the stock had came up from that $88 point to $108. That's a $20 difference there. So maybe they released some really good earnings and people jumped into the stock. But let's see here. 75 cents per share is their new dividend payout. They're currently priced at $108.67. Yeah, 67 cents is the live data. 23 is their price earnings ratio. Their current price to book is 6.1 and their current price to sales is at a 1.6. So interesting one there. If I were to watch this one, I could bet that this one would fall back into that $100 to $90 range in the future once investors kind of jump out of here. American Eagle is our second to last one we're going to be covering here. So let's go ahead and load up this one. American Eagle has had no growth for the last year. If we take a look at how its dividends have been, they have just continued to pay out 13 cents each time they pay out a dividend. It's just 13 cents. Looks like they increased it here from maybe something less. Okay, so they were paying out 13 cents back in the past. They just recently increased it to what looks like 14 cents. So not a very big raise there. Dividend yield is at 2.29 just due to how cheap that stock price is at $23.98. Price earnings ratio is at a 19.67. Price to book is at 3.5. Price to sales at a 1.1. And dividend yield is currently way below its current price. So this one may retract back down to that $16 to $20 mark. I can see it kind of coming back down into depending on how its earnings go going forward. And we have Bank United, which is our last stock we're going to be covering here. Let's see if I can find it. Nope, that's not it. Ticker symbol BKU. BKU. There we are. Okay, so this one has had no dividend growth as well. And if we go back to here to our data, we can see that they continued to pay out 21 cents since 2012. They have constantly paid out 21 cents per share, and as their price came up over that, so over the last 5 years, their price has came up out of there. It was down in that $32 mark, and they recently came up to $41.67 here recently in the year, but I would consider that pretty high. So payout ratio is very low at 25.5. They're currently at a 2.02% dividend yield. Their ex-dividend date is on July 13th. That is next Friday. So you'd have to buy this stock on Thursday or prior. Then you would get paid out on July 31st. We already covered what their price at $41.67. 65 cents looks like live data. PE ratio is at a very low 7.2. Dividend yield 2.02. Price to sales is at a 3.8, and their price to book is at a 1.4. And they have continuously paid out 21 cents per share for the last, 6 years? So, interesting one there. So, that is basically it. We have ticker symbols in order. Hormel Foods, ticker symbol HRL. ABBV Inc., ticker symbol ABBV. We have First of Long Island Corp., ticker symbol FLIC. Cracker Barrel, ticker symbol CBRL. Bank of Ozarks, ticker symbol OZRK. City Holdings, ticker symbol CHCO. Glacier Bancorp, ticker symbol GBCI. Territorial Bancorp, ticker symbol TBNK. We have Darden Restaurants, ticker symbol DRI. American Eagle Outfitters, ticker symbol AEO, and Bank United, ticker symbol BKU. So those are our stocks with ex-dividends next week that look like they could be good research and buying opportunities. A couple of those are trading currently priced below their average for the year, and you're getting a better yield on cost, such as ABBV and a few others out there. If you are interested in any of those, let me know in the comment section below. And if you actually own any of those, let me know in the comment section below. So I think that's good there, a good point there to stop. So if there's any other questions, go ahead and let me know in the comment area there. Otherwise, remember to like, comment, and subscribe for future financial videos. If you are brand new to the channel, hit the subscribe, hit the notification button. I make live and weekly content covering stock market and real estate. And kind of going forward, I'd like to do a lot more of these live events and go from there. As a quick disclaimer, I am not a financial advisor myself. I'm just a financial investor. I do all these videos for fun and entertainment. And that is it. Thank you guys for tuning in. I will see you next time. Have a great day. Bye.